Hello everyone, and welcome to the PivotBoss Monthly Market Outlook for March 2022. This is the first trading day of March here, March 1st, 2022, as we begin the third trading month of the year. Again, welcome. Thank you for joining me here today. Just off the top, again, given world events, it's been incredible here to see the images coming out of Ukraine. Again, it just puts into perspective what we do on a day-to-day basis, and again, definitely grateful not being in that environment at the moment. But again, things could worsen around the world a bit, and we'll talk about some of that. But again, it kind of puts in perspective what we do here every day, and you got to be grateful for what you got here. Anything can change at any moment, but starting off that way here as we head into our third monthly outlook of the year. Welcome. My name is Frank Ochoa. I am the author of the book Secrets of a Pivot Boss, and you can find me at pivotboss.com and also in our trading room at pivotboss.ecofin.com. Thank you for joining me here today. We got a lot on the docket here. We'll be talking futures, commodities here, cryptocurrencies. We'll also talk stocks. We'll look at some different industry groups. We have a lot to get to here. And as we go along, I'll be monitoring the chat, the Q&A section, and also the chat in the trading room. So wherever you are, you can chat, and I'll be watching those various areas. Again, this will be recorded and posted as soon as possible. And if this is your fourth session of the day with me here today, that is incredible, and thank you for sticking it out here today. We had 2 trading room sessions plus a live trading room for Pivot Boss Masters, and now the monthly outlook here today on the first trading day of the month. A lot of Pivot Boss here today, so thank you for joining me for all of these various sessions. Additionally, a lot of incredible charts to get to. We'll be looking at some just incredible movement, for example, in crude oil, gold, silver, and we'll talk, obviously, the ES, NQ, in addition to anything else. If you have any requests, you can start putting them in now or anytime you like, and I'll get to those as we come to it later on in the program here. So again, thank you very much for joining me here today. We'll be going ahead and get started right now with the ES. One of the things we mentioned early on to begin the year, so in our first monthly market outlook of the year, one of the things I mentioned was when you finish a period of time and you close on those highs, and that period of time is a huge range, the likelihood of rejection and snapping back or returning back to the midpoint of that range is high. We saw that play out. An incredible move, a significant impulsive sell-off on an 8-day basis here that was huge, and we bounced back and create this key range. Key range analysis is so important, especially to the way we approach the market, and one of the best opportunities that we discussed in the February market outlook was, now that we have this key range, the best opportunity to buy will be here, and as low as that 40.81. That's the best opportunity to trap and then try to return it back to this level. We've seen that play out now, as February also led to a big decline in new lows. Big rejection. This came in last Thursday, and that was an awesome rejection, and it's led to a great bounce on a 2 or 3 day basis. That day I mentioned that the bounce could be a 1 to 5 day bounce back up, and hasn't been the strongest move. I mean, it has been the strong move on the first 2 days. Obviously a gap down on Sunday, again due to war in Ukraine with Russia. This right here leading to a gap fill and a new high today. So despite a little bit of back and forth here, new highs in this up move, but a failed new high and a close back below the previous session's midpoint. And from at least a 1 day perspective tomorrow, we may expect to see new lows again. And how low do we go? So this key range is very important. We talked about that as being the best area to buy, with a shot to get it back to here. If it can do that, maybe there's a shot to go to the high. And at some point down the road, if you see expansion through that key range high, you got 5,000 and what is it, 5,500? 5266 right here as the 100% target. So sometime down the road, the expectation would be this key range materializes to the upside and we get 5266 on a long-term basis, perhaps by the end of the year. That's why I mentioned in the February outlook that if we do drop here, this could provide the best buying opportunity of the year. And hopefully you were able to buy something or dip the toe, but despite that great rejection, we still have significant headline risk. Again, everything coming out of Ukraine could drag more nations into it, and again, it could be significant, and we'll see where that goes. Again, talks of World War III and nuclear war and this type of thing. That rhetoric has risen. Whether it happens or not, or whether we are there or not, it's just a rhetoric. You know, from a week or two ago it was a certain thing to a week ago it was a certain thing. Now that rhetoric increasing. We'll see where we go with it. So from that perspective, every time we get a new low and a major rejection like this or like this, it's an opportunity to add to positions and continue to do so in a way that's not over leveraging in an environment that could worsen. By no means is this the low of the year. It looks the part, but with headline risks like what we're dealing with right now, we could wake up tomorrow and some significant bomb has gone off in some major center and we gap and we're starting to run. So it looks great, and it was an opportunity to add back or start new positions, but that doesn't mean that there's not more dry powder ready to go just in case we make the next leg down. So from a short-term perspective, great rejection and a great push higher. While we may see a little bit of near-term weakness, this key range low is what we watch for, bullish conviction. If they can continue to hold that edge, there's a shot to see that midpoint. And then beyond that, we could get back to this market structure high. But until this market can push back through 4,600 here, we're kind of stuck in this market structure for a while, with the potential to continue down as well. And that 4,000 level is coming into view now. Coming into view, we mentioned at the beginning of the year that somewhere between 4,000 and 4,200 could offer the best buy of the year. And you've seen the one time we got below 4,200 here, tremendous bounce. Do we need to come down and get a 4,000 test? The one thing about 4,000, there's only one day in the history where the ES has traded 4,000. It was right there on that one day, and that was the only day that it traded 4,000. And ever since, it's been up, and now ever since, it's been back down. So when you look at it from that perspective, perhaps we need to come down there and get that 4,000 before we maybe bounce back up. So as this market continues to deal with all these pressures, inflationary pressures, what the Fed might do about those inflationary pressures, and then you have the building war and how long that could take or how that could turn out, you can definitely see why the downtrend remains intact. But it's still, when the panic is in and you're dropping tremendously, and then you start to see those responsive reactionary moves, it's still an opportunity to add on there, or at least swing it back up and take some profits, as I've done on this recent move here recently. But it may be time to take something off the table in case we start to rotate back down. The one level here again, previous year's midpoint, 42.26. That's the level we talked about right away to begin the year. What a level that has been. And if that level is taken out, it does open the potential for a test in the entire lower half of last year's range, which could take you as low as 36.52. Right now, there's nothing to suggest that's going to happen yet, technically speaking, like literally technically, technical analysis speaking, but a violation of that zone at some point and through this mid would open up the potential to work our way down. So very uncertain as we continue to progress with all these pressures here and headline risk. Again, every time we do dip, it is an opportunity to add smaller back to positions, but protecting positions is also very prudent. One of the things I've done here is add call spreads, for example, selling call spreads on the way down to protect positions, adding back to positions, or taking profits on quick bounces and protecting that way. But again, it is still prudent in this high volatile environment that you continue to protect and be careful. But at the same time, short-term weakness, near-term weakness, whether it's 2 months like we've seen or since November, that can lead to a great buying opportunity long-term. So where are we by the end of the year? You know, when we were in March here, in the first week of March, it looked dire. But where were we by the end of the year? Right? Right now, it looks dire. It could get more dire, but where are we by the end of the year? That's what I'm focused on right now. And that's why building into positions where appropriate makes sense, with the shot, again, at by the end of the year, perhaps we have shaken out and continued higher. Again, perhaps that's overly bullish, but you've seen this market become super resilient. No matter the pullback in front of it, it continues to rock and roll to the upside at some point once it's shaken out. So again, if we are fortunate enough to see a 4,000, it's another opportunity to watch for rejection and adding to positions. If it continues a bit more, it's again an opportunity to add back. Remember, from an index perspective, these markets are designed to go up on the whole. You know, again, look no further than whenever they take underperforming stocks out of the Dow or the S&P and add better performing stocks, right? That's the whole point. So, you know, the powers that be at some point aren't going to let it do this, although anything can happen. Having a more optimistic perspective, I guess, helps in that at some point we'll find enough of a rejection to correct and return and perhaps even push to new highs. But not every stock will be that way. From an index perspective, that is the belief. But again, from every stock perspective, not everything's going to bounce. But there are things that will bounce faster than others. And right now there is significant industry group rotation as well happening in the market. We'll talk more about that as the market kind of reduces risk in equities, for example, and adds defensive equities instead, like defense contractors, for example. So we'll look at that. But right now, the potential here, and even, like, watch this. I am so confident with these key ranges. We see them all the time. We've worked with them for years, traded, made money off these levels. This level, it's hard for me not to see this being reached at some point down the road. But both sides could be true. This thing could go down here as well, hit the lower 100%, and then make its move all the way back and eventually end up there. That could certainly happen. So if you want to remove the noise of the market right now, focus on this key range right here, right there, and these boundaries, and everything else kind of comes into play. So that's what I'll be doing here. The yearly pivots, the PivotBoss pivots here are right on with the previous year's midpoint, and we'll continue to watch that from a short-term perspective. I think tomorrow, new lows, but then can we reject two-day lows and start to push back up? Because then we can pop right back up and we're back at these highs. At some point, perhaps this thing breaks and we rally, and we could be testing these areas pretty soon. So right now, from that perspective, we could see a little bit of strength, but it's all dependent on that key range low. So that kind of sets the edge right there. That sets the tone here as we move forward. Let's take a look here at the NQ. From the key range perspective again, here's your key range high, key range low, and at our February monthly outlook, I mentioned the best buy on the board is right here, and an ambush buy would be 13,130. And look at how tremendous that rejection was when it hit that level. Prices below the key range low, defended and rejected, and here we are trading back above it. So 13,706, the key level to watch. That is the key range low. Again, very much like the ES here, we could drop into that low and continue to hold, and bounce. And ultimately, 857, 14,857 is the midpoint of that range. Maybe there's a little bit of overflow into the 15K zone, but until we can get above 15.2, we are stuck in this market structure for a while. Again, when you look at the longer term, this is a hard start to the year. We've seen worse, and it could get worse. But based off of this key range, 18.3 is still that upside target. And it's just very difficult for me not to see that target be reached at some point down the road, even if price hits the 100 first. So again, using this key range target and eliminating everything, all the noise from the market, may be one of the best approaches to use right now, because it's going to tell us where failure happens here, and then we drop, and it's going to give us these targets. We can then use yearly key levels as well to help us out. But right now, 13.7 is the level, and we can drop into that zone tomorrow or even a little bit below it, and if we start to see rejection, this thing could bounce, and we're headed north again for another 1,000 or 1,200 points. So from a short-term perspective, again, when we're hitting these lows and you're seeing these rejections, it's an opportunity to add or to build a position, but do it bits at a time right now. It's just not the market to go all in full size. It's a market to, when you see a great price and you like it and you want to add to it. But other than that, watching these key levels and being nimble is a great way to go. All right, let's take a look at crude oil. Wow. I didn't think I would see another day like this in a very long time. That was an $11.25 day of range. And this one said hold my beer and was $11.46. Wow. Just tremendous strength. This morning in the pre-market video, I mentioned that it appears as though the 96 market structure edge was taken bid, which means we are now in a transition phase to 106. And there it is. It happened in one day. I didn't think it happened in one day, but once we started to look intraday, it said it wouldn't surprise me if we hit it in one day. And I know JP knocked it out of the park today and killed it all the way to 106. Great job on that trade. Again, this one, for those of you not in our trading room day to day, I'll cover this quick market structure with you. But this one's been working in 10-point increments. We had the 66 market structure edge here. And recall, this is our key range. Okay? There's your midpoint. We looked at this earlier and we saw this rejection here as a huge 4-point day, huge rejection day. And on that day, we said, okay, if we can rally to 70.83 and cement this key range, we will likely rally to 96, which is the 100% target. And so on December 2nd, on this rejection day, we had enough conviction in the rejection, in the impulsive move, and in this developing key range to already say 96 was a target. And it happened. That's how powerful these key ranges can be. Now, when you look at this, you can see again, 66 is this level. You got 76 is this level. You got 86 is this level. 96 is this level. And you guessed it, 106 is this level. And so look at how it trades in these distributions. And it trades in this distribution, then in here, and then right there, and then here. And now we've just made the transition into the higher one. Theoretically speaking, Once you reach the top, it comes back to 96, and you trade in here and then work higher again. Just like it did here. It went to the top and it dropped back to the bottom, and then it worked back up, and now it's higher. That's, typically speaking, in a normal market. Clearly, this is an abnormal market, a wartime market, perhaps the brink of World War III market. We have the State of the Union address here later on this evening with President Biden on deck here, and that again could provide some more clarity as to how we'll proceed, or how, what may happen moving forward, but if we get any answers at all. But I mean, that's something that, again, we're in an abnormal market. So while this would be normally expected, as we talked about here, I don't know if we get that. We could easily make another jump and be at 116 tomorrow. So again, this is just an abnormal market, but the one thing I continue to mention regarding crude, you don't want to sell it right now. And we mentioned that here and here as the best buying opportunities, and said in an inflationary market where the inflation is rising, this commodity will rise, and then you have a wartime market and you see the volatility and how it's risen. So it's a double whammy right now for crude oil as this thing continues to rally. One more thing, this key range, you had the 100% target here. This thing rallied so much that whenever we reached it here, I said, you know what? This is so bullish that we need to add another one. Let's go to the 150% extension, and it reached it today. And the next one up, which is the 200% extension, takes you to 113 basically. So 113 is the next target based on this key range. Wow, how that's played out. Now, I do want to take you out to the higher time frame and give you a bird's eye view of crude oil. You got to go way back in time here, and some of you may not remember, but price actually traded 140s before, and we are coming back to a point where that may actually come into play again. But that high right there, 147.27. I had been in and long this entire way on multiple pullbacks, and was in on that day as it hit the highest high. My eyeballs were going out of my heads at that point, and that was the last time that algorithm had fired long, and it's flipped short, and then we were riding it down a bit here, and that was the most significant impulsive move I've ever seen. Now you can see the 76 level that we talked about before as a market structure edge was here, and it broke through. And at the time we mentioned breaking back above the 76 market structure here takes you back toward the top, which is about, you guessed it, the 112.83. Look at that. It's right there in line with where we came from before. That's where we're headed, is that 112. But it might not be done. And in extraordinary markets, you will not only go through one market distribution, but you tend to go through the next as well. Just like you saw over here. When it went from here up, it didn't come back down. It did it again. And then it came back down. So to me, 113, 112 here is the next upside target. And then there's a shot to explode again and explode and get to 150 as we trade in the upper distribution. It looks to me that this market is a perfect fuel for a 2 distribution rally. And that's kind of what we saw back here. We saw a 1, 2, and 3 distribution rally. We've seen it again. 1, 2, and we'll see it again. So that's the long-term talk here for crude oil. We may be headed up toward 145 to 150 up ahead, and next stop 112.83, which could be hit by tomorrow's open the way we've been trading here lately. Remember, this market's averaging 5.7 points on a 5-day basis, And for heading into tomorrow's market, that's going to increase with today's 11.5-point day. So long-term thoughts right there on crude oil. Could be pain at the pump for a while to come as this thing explodes even higher. Now, again, you can just look at the chart here and it's the same market dynamics. But look at something like nat gas. Nat gas is one of those commodities that does this quite often. not always on a monthly basis. Let's look on a weekly here. But it's one of those ones that can easily move through these distributions, and we talked about it last time right here. 5 to 6.5, and down here was 3.4. So earlier last year when we broke through 3.4, I mentioned we have a shot to get to 5 because it's the top of the market distribution. And I said the same thing I'm telling you now. Normally, when you reach that, you would come down. But this is not a normal market, and it wouldn't surprise me if we rally the next distribution to 6.5. And we did. That's a 2 distribution rally. So right now, crude oil is basically right here, just shy of the 112s, 113s. And very soon, in a few days or a few weeks, it could be up here. So again, we just discussed this exact scenario in nat gas last year, and it played out. And again, when you look at crude oil, it could be the same. As soon as it busts through this 118, we have another whole distribution that could be ahead. So keep that in mind with crude oil, and as things continue to intensify overseas. Well, overseas for me, but some of you I know are all over the world right now listening to this. Now, let's take it away from gold, crude oil, and go to gold here. Gold, another incredible commodity that has finally woken up from a slumber. I was down and out on this one for a while just because once it topped out in August 2020, every rally had been stifled for a month, year and a half. It was just not going anywhere. But the one level that was tremendous was the 1670 level. Look at that support. And when you knew the support, if you didn't already think it was great, when you knew the support was legit, was when it responded on the flash crash. Remember, there was a flash crash in gold? As soon as it hit 1670, it bounced. And a flash crash bottom is a real level. I mean, that is the low. And so from that time, it was never in question again. You had higher lows, you had this compression on the highs, and here recently you've got an expansion. So you've had an entire year of compression, an entire year of a sleeping giant, and now you're starting to see your expansion. You've gotten your initial test here at the 1960s, which has been a tremendous level. The next test will take it through it, and we'll be through 2000 in no time. And from there, you have this upper distribution into 2100 that's at play. We haven't seen that since August 2020. So this is the next path for this one as well. The one thing I do want to stress with gold is something that we've touched on in the trading room here lately, is that in the face of all of the uncertainty and the headline risk as equities drop, Bitcoin and Ethereum also dropped as a risk asset. Meanwhile, gold actually rose to the occasion and became the defensive asset that everyone rushed to, the rush to safety, and this thing came a running. So that is significant in its own right there, and could continue to suggest again that again, Bitcoin, Ethereum, other cryptocurrencies again are very much more like risk assets right now, and this one could continue to be that store of value at least for a while. Now, two things right here. Number one, look at the compression of the bands. These are the PivotBoss bands. You are compressed, and you are now pushing through this high. That's the R3 right there. We may go into a full-on price discovery phase Now through that high, and as I mentioned, through 1980 here opens up to 2100 in this upper distribution. But that's just baby talk, because we have through that high that can take us well beyond it. And in order to see that, you wanna jump up a little bit higher to the weekly time frame. And if you look at the weekly time frame, you have this large rounded bottom. And initially, when we developed that rounded bottom, our analysis said through 1375, you get back to 1525 in a hurry, based on market structure, and then you go to the other side of the range at 1800, based on market structure. And now you have developed a secondary rounded bottom accumulation pattern, and it now looks like a ginormous cup and handle pattern where we're breaking through the top of that range, and this thing could open up the upside in tremendous fashion. And where could a target like that be? Well, glad you asked here. We have ourselves this key range here that gives us all the levels we need now to the upside. 2300 could be the upside target here. 2300 down the road. So you have this key range, and we're now at the mid. We have this rounded bottom, a larger part of that accumulation pattern, and as soon as we get through 2000, we're here at 2100, and then soon 22 and 2300 are next. That's the level right there, 2300 from a long-term perspective, based on this rounded bottom, and if we start to push through 2000. So that's where this thing could be headed as well. Now, if you bring this out to a monthly chart, I know I get silly sometimes when we look at some of these long-term historical charts, but if you look at this from a monthly chart perspective, the rounded bottom that we just referenced here, and now you have the follow-up, was not even a bottom. It happened after this larger rounded bottom. So it's doing it again. It's doing it again in a way that rounded bottom led to a huge move, pullback, rounded bottom, and another huge move, pullback, rounded bottom, and maybe another one to come with 2300 up above. So gold, again, interesting the way it looks. Tremendous strength could be ahead. When you look at the intraday, or rather the daily time frame here, and look at these bands, they are pinching, and we are forcefully pushing through R3 with a shot to break through long-term resistance that hadn't been broken in nearly a year and a half. That could open up quite a bit of upside. The talks of war and all this other, intensity of the war at least, that could continue to drive these prices. So that's the theme here for today. Unfortunately, we are dealing with this situation, but not dealing with it like those brave Ukrainians that are actually going through it right now. The images coming out of there are just harrowing. But again, this is what we have to deal with at the moment, and defensively speaking, crude oil, gold, big time movement to the upside. And we'll look at other defensive issues as well with regards to different groups. We'll get to that in a moment, but I do want to bring up one last commodity, and that is silver. Not to be lost in the mix is silver. This year, January monthly outlook, we mentioned 22 was the entry. And with a 22 entry, you had two upside targets, one of which was 25. It was just hit recently. And the second of which is 29. And so far, look at 22. I didn't engage that market. I kind of forgot about it, to be honest. But had I not forgotten about it, those are perfect rejections off that zone. A great extreme reversal and return off of 22 with a huge impulsive move up. And then another lower low failure with a great rejection, midpoint retest and go. Silver really doing well off of our called levels earlier. And two targets we mentioned. So 22, and then you have the middle of the range at 25. We just got it. And once you get through 25 or 26 here, you open the top end of the range at 29 to 30. And as we talked about gold making a transition, look at today's big day through this rejection day, right at the top of the market structure and at the previous year's midpoint. This might be a prelude here to what could be a transitionary period through the next upper market structure up here, and we trade here. So this one from our earlier call this year, 22s, it's gotten a double bottom precisely off 22s. Great move. Already hit 25 with a shot to go beyond. So those are the commodities right now. Crude oil, you have crude oil, SI, gold, all with the potential to rally in various capacities. ES, NQ continue to see some weakness, but we have great key levels and key ranges to continue to watch there. All right, let's get to some stocks. First, we're going to go to, I'm going to bring up Visual Trader real quickly and bring this way. And one thing that you'll notice here at the top end, if I go by group here, and I'm using the trend with changes in trend transform, which shows the overall trend and the current change in trend, if at all. And at the top of this list, which is few, you see certain things. Number one, surprisingly, is solar. We'll look at that in a moment, but solar is outpacing everything right now in terms of strength or relative strength. You have defense. Right now, defense contractors, certain ones rallying tremendously. We just talked about gold. And if you look at ag chems, agricultural chemicals, these are rallying in kind with defense. Oil, anything oil right now, also rallying. And then you have defensive ETFs, things like bonds, gold, things of that nature, showing strength. And then when you flip this thing to the other side, social media, down big. Read Facebook and others. You have some home improvement down as well. Those are things like Home Depot and Lowe's as they've dumped. You know, they continue to drop, but now S3 for Lowe's and Home Depot also below S3. Semiconductor equipment's down big. You know, again, Nvidia's and others. Beverages, hard beverages down tremendously right now, but again, at some point here we may start to rally. We have Coors here, Molson Coors with a nice rounded bottom that's developed here, and this could open up a bit of strength to the upper end of that market structure, so we could be looking at a 52 to 60 rally based on that move. So just looking at some of these interesting things pop up. We'll talk EV automakers as well, but first let's go to solar. The surprise group here is solar. This is a composite of the solar group. And you know what? You got to be a little impressed with the solar group here recently. It's really built out nicely. I remember the time where the solar group consisted just of First Solar. That's it. And now, if you look at this with symbols, both rather. Am I clicking it? Here, let's get off of this, and now let's click it. Look how many candidates are there. This is Solar Edge, CSIQ, Enphase, HSI. You got Daku, JKS, all these, right? And they're all being used to create this composite chart. And when you look at the composite chart, it's great. It's got great edges, it's got great market structure, and now you have a great rejection and you have industry group rotation. Somebody, somewhere, institutions, funds, whales, whoever, have been buying baskets of this, and it's pretty significant. So now when you break it down into the components, Solar Edge here, let's click on Solar Edge. Look at the strength in this one. CSIQ is a good one here. You can see the strength in this one. You can see some are better than others. And I would argue CSIQ is one to watch. You have this $30 level, and you were trading in market structure below it, and you're now recapturing prices above 30, which means the next retest of 30 is a seal for a push to the next market structure edge above. That takes you to about 43s. So right now, 30 to 43 could be in play. Decent percentage gain there. And again, that's based on the basket of stocks here being bought. They've all been bought the same rate. Here's Enphase. You can see how strong that one is, bouncing off S3 recently. And again, great market structure. Look at the 120. Great market structure. Here's kind of a, perhaps that's not the top end, somewhere in that zone, the top end, and then you start to work your way higher. But great reaction there. DQ. If you had to think of one here, again, CSIQ is a good one. DQ looks just like it in that it has great market structure here, and it's just broken back above the 46s or so. It had this little accumulation down here, and now it's transitioning back above support, back above those prior lows. And when you transition, the next hold takes you higher, and you start to work back within the previous distribution. So you can certainly see where some of these may run off. JKS, Jinko, also looking good. Sunworks, not so much. You know, the same basket that that bought the rest, you know, bought this one too, but probably much, much, much less. So, you know, there's some that are being put more to work, more money to work on some of these than others. TAN with a strong rejection. I would put TAN along with DQ and CSIQ as the better candidates. So here, again, you're looking at about a 70 level here, 69 or so. Strong support, and then you build this market structure below it, and now you're transitioning back above. So the next pullback, ideally, you're holding and you're making your move up the market structure. You got 80 and then back to 90, and then you start to work your way up from there. So again, TAN, DQ, CSIQ, all very good ones from that perspective. If you look, we got a few more here. SOL, again, not the best there, but still showing strength. First Solar, perhaps one of the bigger ones here. First Solar is nice strong candidate there, working off the lows, and again, like some of these other ones, significant support over here at the lower edge, a nice trap, and then a big push back above that support. So now you cross, you recross, you retest, and you bounce, and now you work your way back toward 90. So 70 to 90 could be ahead for First Solar. I like this support area right here. I like this tremendous rally. One of the things that would be great is on this rally here, that becomes a key range. So if we pull back to the midpoint of that range and then cement that key range, we have ourselves reliable upside targets and levels to work off of. So these, again, showing some strength. Nova, nothing to pay attention to, but the others looking really, really good here. So First Solar, TAN, you got DQ, CSIQ, those are all showing quite a bit of strength and opportunity here. Industry group rotation, the money's flowing into solar at the moment. And I believe TAN also may be more defensive as well because of the Ukraine-Russia situation. The other one, defense. This is defense, and you can see how tremendous the strength has been on a composite basis. The ones that you would normally think would rally, like Northrop Grumman, General Dynamics, Raytheon, Lockheed Martin, are the ones that rallied. Look at this two-day strength, and look at how over the weekend and Monday, Tuesday now, the market has digested the images coming out of Ukraine and what the world may have to do about it. And you see that right now, the smart money here perhaps putting bets on much more defense spending as we may have to go into war World War III type of mode here. So tremendous strength here out of these. You can see right here GD, another one showing tremendous strength. You have Lockheed Martin, look at that move. You have Raytheon, tremendous strength. Now, of all of these, here's one, AVAV, a lesser known one with market structure where it broke back above that market structure right here, and that could provide, again, a great jumping off point for the next level up as we move higher. So any pullback towards 65s could be an opportunity to sit on top of this market structure edge and rally back toward prior support. That's AVAV. Now, if you don't want to play a pick'em game, there are two ETFs, one of which is PPA. Let's click it proper there, PPA, and you can see this is a aerospace and defense power share. And look at the strength here over the last few days. The powers that be have been buying that up for 3 days straight, and look at that move. Friday, Monday, Tuesday, nothing but strength here. That's very telling. And look at the compression it's breaking out of. This thing could just continue to lift off and really move in this environment. ITA is the other one, the bigger one. This one rallying, breaking through recent highs here. And this is the bigger, this is the iShare Aerospace Defense ETF. Breaking through 110. You likely have a continuation to the upside here. For this one, looking at the options, it appears that the 110 at the monies right now are the ones being bought over the next 2 months. Well, the current front month, which is not many days to expiration, and then the next month, which is about 44 days to expiration. So right now, bets on this one are at the 110 calls for a shot at pushing things to the upside. You can also buy a call spread, for example, and let this thing go. But this is a group right now where a tremendous amount of money is being put into. Industry group rotation is a big deal here when you see it happen live in front of your face. These two groups tremendously seeing strength, but not only that. Now you have down here ag chems. When you look at agricultural chemicals, look at the same move right now. Look at this move right here. Those days right there, tremendous strength, tremendous strength, tremendous strength, on and on here for the last several days. And again, that could provide an opportunity here for those to piggyback off of some of these others. So quite a bit of strength overall. Look at PTEN. You got oil services here in the oil services group pushing through R3. That could open up quite a bit of upside. I mean, this thing could really, really run off if we continue to progress at the rate we are. So defensively speaking, you see the market is already positioning themselves in a way. And not only that, you're also seeing it with regards to the bonds and things of that nature. What is it, BNB? Or is it BND? You can see this one here responding recently on a giant 2-3 day move here. Big push up. Again, some of these defensive types of funds starting to bounce on this. So again, if you see that happening, it makes sense to be a bit defensive also in your portfolio just in case. Again, I continue to add small and add if I can, or at least build a position and have enough capital to add back should a pullback occur, as I'm looking for again this part of the year, looking for that entry or series of entries that leads to an overall profitable outcome by the end of the year. That's the goal with this right now. Now let's look at EV vehicles for a moment. Let's go to groups. Actually, let's go both again. And let me come down here and EV Charging stations. There you go. EV Automakers. Not good as a whole lately. You can see again, as I've mentioned from the beginning, that this is not the easiest. Actually, it's probably one of the hardest industry groups, the automakers. And then you add to it the EV component and makes it even more difficult. And then you add to it, again, the ramping up of a young company to get to where it needs to be. It's just a very difficult business. But at the same time, there's some great rotations that can be had. There's some great moves that can be seen. And there's some that's developing right now. We can start with the big Titan, Tesla. And the last time we had this one as doubling was when it was at about 650 here, and mentioned this is enough compression, and if you can get in at 650, you likely see 1300 by the end of the year. It got close to 1300, traded about 1250 or so. So very close on that estimate, and then it rotated back down. The beginning of the year, at our first monthly outlook and during the first week of the year, I mentioned if we dropped into about 750, that might provide the next opportunity to double this one. And the one day that it traded 750 and below was the day that led to the biggest rally so far of the year, and we've bounced ever since. So a nice move off the 750 level. It's in line here with the third standard deviation of the fiscal year PivotBoss bands. Again, that would suggest significantly undervalued situation compared to value. There might still be some rotation and back and forth, but 700, 750 is still the zone to watch. It's the market structure edge, the breakout point from before, and if it continue to hold over the next few weeks here, we might have a shot to rally back toward the top end of this range, and then perhaps even through it for a continuation up. So this one, it wouldn't surprise me if the next pullback below 800 provides an opportunity to dip the toe in this one and get it going to the upside. Lower low failure with that pullback could be in play. Now, if we look at a couple of others, one of the ones we looked at before was Rivian. I'm going to switch the chart and go over here for Rivian because it has more data. Here you go. For this one, I mentioned before that on this 3-day move, this was on the first trading day, or the monthly outlook last February. I mentioned for this one that was a good 3-day move, and if you could get in on a retest on a pullback, say 57.5, 57.5 with a long-term potential to make it all the way back to value up above would be a double. 57.5 times 2 is 115. So that's my entry right now on a starter position. So when we did pull back here, the entry was this morning right there, and so far I've just been holding that at the moment. The reason why I like this one as well, number one, they have a good product. Yeah, their first truck here, their truck already got Truck of the Year award before it was even out. It was that's how good it is. People love it. Maybe it's hoopla, maybe not. I haven't seen it or been in one, but I mean, that's good stuff right out of the gate. It's not just someone making some trash. I mean, it's a good product. Now, can they scale and do the whole things that Tesla had to do to build? That's still yet to be seen, and we're going to have rough earnings periods here and there as we move forward. But when you look at who's positioned where and who is continuing to position themselves, that's where you have the potential to see this thing bounce. So you may have seen some headlines come across that Soros was in last year and bought $2 billion worth of Rivian in last quarter. Other funds did as well. A lot of folks did. So if you think of this as being VPOC at the time, at 115 was VPOC, it dropped to 57.5. So that means Soros comes in, buys $2 billion worth of stock, and very quickly he's down $1 billion on that position. So again, when you think you're having a bad day, sometimes just know other traders are losing billions. So now once you know that if they put in $1 billion, rather $2 billion, that's probably a starter position as well. And the goal is probably to add back. And so once it dropped down here and we saw this initial move, I mentioned again, this could be a spot to add back now that it's been cut 50% from its value. Because this was a big HVN. That is value. And then what happens? You see value shifted down. Now we have a new HVN, a new CVPOC, because we have new accumulation down here. Enough responsive participants have come in, enough so to shift value downward. And now we wait. Can price get through 72.5? If so, it can sit on 72.5 and make its way back to the previous year's close and perhaps back to value. Again, because of the, I mean, we can continue to say this over and over, but because of the market pressures here, this process may take a little longer than other times, or may never happen. Who knows? But whenever you see billionaires come in with billions and their position drops, they're not just going to sit there and wait on a loss. They are going to defend with more money. And so by me having a position at 57.5, I get the luxury now of people like billionaires like George Soros to come in and defend my zone because they ultimately want to bring it back to where they got in and improve their cost basis in the process. Additionally, Amazon owns 20% of Rivian. If you want a backer, you want Amazon, and they're likely not going to let this thing fall to the floor either. They'll come in and defend. Ford owns about 9% of Rivian, right? They'll likely defend and build. So you have a lot of potential support here, but that doesn't mean that this thing can't go lower. So I went in, again, building a position light, and if we were to drop further, there's the potential to add there. With earnings coming up, I'll likely do some sort of hedge there just in case, while doing perhaps selling the call spread or something in order to just protect against this. But again, once we get above 72.5 and that LVN, it's a home run city quickly back to the previous close, and you trade in here for a while ahead of this. My goal again is from an initial position entry of 57.5 to bring it back here, at which point I can sell half and have a free position in this one. If we drop lower, I'll add, improve cost basis, and when we double, sell half and have a free position as well. And that's the goal with this one. So we talked about this one last December. We talked about this one last February and how I would likely approach it. I've already begun that execution of that plan here, and we'll see how we go from there. Nothing says you can't take value offered and drop again, and this could be what does it. So again, I will be defensive and hedge that position a bit when the time comes, but until then, I'm okay with holding the bid I got here. I have enough of a position to be in the game, but at the same time not to, if we drop to 40 or below, it's not gonna hurt me tremendously. Instead, it's an opportunity to add and continue to build into that position. So that's Rivian. And I wanted to talk Fisker. Fisker is one that looks enticing at these levels. Number one here, $10. Tremendous support. Look at this. Look at that $10 level in Fisker. The one time it got below it, snapped back tremendously. Got to it, snapped back tremendously. Got to it twice, and has responded twice. Above 14, and you got to 18. Above 18, and you got to about 22. And those are your three market structure levels that you're working through right now. You had, a move up, 2 distributions up, failure, retest, and 2 distributions down, and a 3rd distribution down. So what I mentioned the trading room here a little bit earlier, as I gave a little bit of a preview to what we'll be talking about this afternoon. If we drop below 8 or below 10 here, somewhere between 8 and 10, 9 and 10, it could be a similar trap to finally get in below here before it snaps to 14, rallies to 18, and perhaps goes back to 22. Now, again, that's pure speculation and speculative play here as this one continues to do its thing in the market. I have a friend who has a Fisker, loves it. But again, this industry group is what it is. So for something like this, options could be a way to go, or you could be looking to dip the toe just from a small time perspective. I mean, below $10 and put in however many shares here, and if price can rally ultimately to 20 or 18 even, right? If this thing gets to $9 and can go to 18, you sell half of your shares. Say you buy 100 shares at $9 and it rallies to 18. Say you buy 950 and it goes to 19. Whatever your entry is, sell half the position once it gets there. And then you have a free trade. And so this range right now is a 100% range. You're either losing 50% or gaining 100, losing 50, gaining 100, losing 50, gaining 100. And we're at the edge right now. Keep an eye on this one. I'm going to go ahead. I forgot. I deleted my alert. If we drop to those lows, again, there could be an opportunity to add, say, 950, and you take this thing back toward 20. It'd be nice to get one little dip below this zone, trap, and go. So, Fisker could be interesting here moving forward. Again, if you're going to buy shares, do an amount that you feel comfortable sleeping at night. Obviously, you don't have to go over the moon with it, and then you also have the option to add back to a position, build that into your plan ahead of time. So that's an opportunity there for the EV group. Other than that, not really looking at any of these other ones so much. Lucid gap down today on news that they have cut their production estimates by 40% due to extraordinary supply chain issues. So they gap down. This one's likely headed all the way back toward support at some point, down here toward 17 to 18 again, at which point it might be time to try it again. But until then, this one getting hit pretty good right now. So watching things like Tesla as a leader. This is just the one that's been there, done that, and is very aggressive right now, trying to be very aggressive in their production and getting that going. So the pullback here, this provides the best opportunity, right? So when I'm talking about Tesla, and then I say Rivian, and then we say, what's the other one? Fisker. You put much more money here than you would there, right? And this one, again, you're putting much more money here than you are in this one. Perhaps you're putting a little bit more in this one than this one. There's different levels. And right now, if you want best of breed, it's Tesla every day of the week. And on this move sub 800 into the 700s, it's just too cheap probably. And again, 750 could open up 1500. So there's always levels of which one is stronger. Okay, let's take a look now. Looking at, all right, we covered those industry groups. We did solar, EV vehicles, defense, ag, chem, and yeah, that's pretty good. Yes, absolutely, VJ. I think you're right on. On some of these, there's no rush. There's no rush on these, and if you have to wait for earnings to come and go, that's probably the best way to go, especially in these stocks or industry groups where profitability, revenues, earnings, bottom line isn't there yet. You definitely want to be a little more careful there. Now, in stocks like Google, Microsoft, right, Apple, those are strong money-making stocks. So even on earnings, you have to be careful, as we've seen some of those, get hit. Facebook got crushed again on its deal there. But on the whole, those are ones that make money. And the ones that don't, you have to be much more careful on earnings, and I think you're right on the money. So you have to be very careful. Logistical issues hitting all of them, supply chain issues hitting everything. And again, this is an opportunity to buy when everything's getting beat up, ahead of what could be down the road a recovery. So long-term active investment approach, but again, doing it on an active basis as well. Okay, I wanted to talk a little bit of cryptocurrencies as well. Let's see. Let's bring this over right here. We talked Bitcoin and Ethereum last time. We've talked AVAX. And we looked at several of them. The first monthly outlook of the year. Actually, let's look at Bitcoin over here first. So here's Bitcoin. I've been very impressed with these markets lately. The way that they've moved, not just Bitcoin, not just the big ones like Ethereum, but even some of the smaller coins, like an AVAX, for example, that we've talked about many times here recently, and some others. The rejection signatures we're seeing, the failed new lows, the stop run days, the great market structure we're seeing, the volatility and the percentage gains that are available. All of these, again, have been impressive. And very similar to some of these other markets, building positions right now in several of these, with an eye toward knowing that we may not be done going down yet. As of right now, prices below 35K. The 2 days we saw prices sub 35 have been bought tremendously. And again, I would always say that when you see an all-time high like 70K, you cut it in half, and that's an initial entry, right? 35 to 70. You cut it in half, and that's an initial entry. And you can see that happened there, and it's happening again. But that doesn't mean, again, that we can't come down here and grab the previous year's low. That previous year's low seems to be hanging in the air. Do we need to go get it? Maybe not. But it could happen. I know that recently we rallied here over the last couple of days, mainly, again, based on Russia-Ukraine news. Swift banking community here turning their backs on Russia, and now perhaps they have to go to the crypto markets. And again, that type of buzz led to an increase in price. And so, again, this market right here, I still firmly believe that we have a shot to rally back toward 75K. 75K would be a soft new high. A soft new high, 75K right there, with the potential to see even more beyond that. But the current entries are based on just getting back to the previous high. Getting back to that previous high right there. Can we get back to 70 to 75? After this major collapse, it did. It went right back to that high, traded through it, higher high failure and dropping. And at some point, whether we come out here and take this low out and then go, the likelihood of coming up here and getting that expanding megaphone type of pattern, to me, seems very, very doable. Especially given, the continued maturity of this market and perhaps continued adoption, especially by institutions and other things. That could easily be the case. Market structure-wise, we're doing this right now. We're somewhere right there. Maybe we start going into the next one up above at some point. But sometimes getting up here starts by pushing down here first. You know, you got to kind of push down here first and then you make your move. So maybe one more dump is coming. You know, you got your initial sell-off, reaction, relief rally, and dump. Then you got another relief rally. If this thing can't push through 46s, maybe we dump again, and this time do we go to the low? I would say right now 25K is still pie in the sky opportunity, but it's a pie in the sky that keeps coming a little bit closer to reality. We do have an SBW down there at 25,600, a huge tail that shot down there that could be in play as kind of a tell. And there's a significant CLVN below previous year's low. I mean, if we got 25, that would be tremendous. As of right now, I've already started positions in this one to build. I'm in at 37.5. And 37.5 times 2, you guessed it, is 75. So if I just hold on to that and it gets to our target, it's a double. But if we drop, I would add bigger, much bigger. So this is a starter. I'm in from 37.5. There's been a decent little move. But at the same time, if we drop down to here, I'd love to add much bigger to that position. And in that case, again, you're trapping below the previous year's low and you're returning it to the close. At some point down the road, if we can get through 50, it opens up the upper edge up here. So hard to tell where we're going here lately. Outside of the range, because we've been, you know, the range has been so good. It's a 10,000 point range here that's in play. And while we may hit 46s here tomorrow or soon, it could be another rotation down coming up ahead. So not holding my breath on a push through 46s, but if we did, and we got a significant transition through 46s, that could provide an opening at least to 52. So there's a plus 6,000 from 46 to 52 that could be in play in that scenario. Not holding my breath on that right now. I think we see kind of what we've seen the last couple of rotations. We kind of pull back a little bit, but we'll see what happens. Now, Ethereum. This one, I'm also building a position in as well. I'm in at 27.50 on a starter here. Had I been patient one more day, it would have been a little bit better. But 2,300 to 3,300 is the range. So 1,000 point range here, whereas Bitcoin's trading on a 10,000 point range. Similar to Bitcoin here, we broke through that range here at 2,800, and we have a shot to go up to these highs, which is about 33. But again, there may be an opportunity to bring this right back down. We're inside this range. Not holding my breath on a push through 3,300 yet. If we did, 4,000 is around the corner. That's the next market structure above. Previous year's close is in play as well. But given the market environment, right now it just looks and smells like this could be ahead for the broader market as a whole. You know, let me go back here to the ES for a moment, and then I'll jump on BA as well, Richie. If you look at the ES, let's go back to Q4 of 2018. Look at this right here. This is our market right now. You had that drop, strong shakeout, drop, and right now we are basically right here. This is where we are right now in that Ethereum chart. We're right here in the Bitcoin chart. You know, we're right there with a shot of this being next. Maybe not to this significance, but maybe. Remember, this was the worst December on record ever. That was not a good December. But this was a good Q1. Got it all back on that run, but this was rough. This was great. We had the short, we got all that, but man, that December was relentless. It was actually good on the first move. It was right here where it really broke our the whole support and opened that next wave. But you see, this is where we are right now. So now if we come back to Ethereum here and just look at that structure at the moment, here's your drop, here's your bounce, here's your drop, here's your bounce. Are we about to see this stretch coming? Again, given geopolitical headline risk and inflationary fears, we have Fed Chair Powell on deck the next 2 days testifying. We have State of the Union address this evening and non-farm payrolls on Friday. This week is going to be processing a lot of this, and then we'll see where we go. But again, just something to keep in mind as we continue to be a bit cautious, building in where you can, but at the same time being prudent, protecting your positions, and if at all possible, staying best of breed. We haven't even talked things like Apple, but beginning of the year I mentioned anything sub 160 is an opportunity to buy Apple. And so far, the 2 opportunities we've seen below 160 have led to nice buying opportunities this year. But you can see it hasn't been emphatic. Here's the 160 level. First time it bounced, the second time it bounced. But there's, rejection. Are we about to see another rotation down? It's 138 next. So everything looking like it has some pressures here. Nothing's immune from going down at the moment unless your name is Crude Oil and perhaps gold. So those are going up tremendously. Defensive stocks, obviously. Some of these other ones, you just have to be a bit more careful. Now, looking at Boeing, we've looked at Boeing from time to time here, and this one continues to be difficult for me. It is in a defense contractor group here, but also it's not fully just defense, obviously. So it's not rallying like those. Instead, it's mostly range bound with lower highs and lower lows. You can certainly see this market structure here. Before it was maybe up here. Value still a little bit lower. It's never fully recovered from the pandemic. I mean, here it was pre-pandemic, and here it was, boom. It's been a very lazy up move. Now it's stuck here off the 185s. 235 is here. This one's just very tough for this one to get off the mat. You'll notice, though, last year was all about holding in a narrow range. So you had that high, and this is the previous year's low. And that's it. That's all of your range. And it's inside the year before, and we're knocking on the door to the yearly low. So if it can't hold that yearly low, 25% is here at 162, 50% is here at 137, and then you have your additional ones that can go down. I think if this one failed at 185, you have down to 138 and trade in here. Bull case scenario would be a rejection of that previous year's low. Like, again, it did it here and rallied. You got to really reject these prices, because if it fails here, that's a lot of support that gives way. And the next support level down is about 50 points. So this one hasn't been easy, as it's been mostly just range bound. But it also hasn't really fully recovered, never really has. Even when it was up here, it was very erratic. So it wouldn't surprise me if we dip a little bit lower here in this one coming up. Okay, let's talk. We just did Bitcoin. We did Ethereum. Let's go to Avalanche and take a look at this one. This is one of the ones I mentioned at the beginning of the year. There it goes. And at the beginning of the year, if we look at this right here, this is the market structure we were using. And I said if price drops below that market structure, the entry could be between 65 and 75. And then ideally that's an opportunity to trap below the low, and once it gets above that low, there's a shot to make a move, you know, across this market structure. And I'll be honest, I missed this one. I let it get away from me down here below 60. That was a great opportunity right there for a failed new low. And so I was like, oh man, I missed out on these great prices. So I entered a 65 entry along with our analysis, right? We said between 65 and 75 should be a great entry based on this market structure to build a position. And right there, it got to 65.02, I think, 65.03. So it missed my entry by 3 ticks and rallies. And I was like, no way. And then I said, okay, well, I'll get in at 75 then right here. And it got to 76.20 and rallies. And I said, no way. So I missed those 2 entries. Over here, though, I did get in at 74. So when it pushed down here, got in at 74, hit 90 today. Today's high, 90.88. So not bad. Again, building an entry for the potential to push back up toward 120, 130, maybe 150. Maybe this thing explodes to $200, $300, $400, $500. Who knows? I like a lot about what they're doing here. I like that they're doing a lot of things similar to Ethereum as well, proof of stake, etc. This is one that could see some tremendous growth. Now here's where things get interesting. We got this upper line, and at some point, man, if we can get through that upper line, it could explode, right? You still have this that's in play, and right now we're kissing this upper line. Are we going to need a move like this before we bounce? I don't want to be a part of that move there if it were to drop that low. But at the same time, depending on how much you're putting in there, you know, adding back is a great way to go. But if you're in on some of this, you can take some profits and then look to add back later. You can take it off, and whatever the case is, right? Be active with it if you want, or have a long-term outlook if you want. I'm trying double duty here in that if we can find great short-term entries, we can make money short-term, take some profits, but at the same time, these are good enough entries that if you're holding for 1 to 2 years out for the long term, where are these at that point, right? The growth could be tremendous on some of these. Not everyone, but there could be tremendous growth in a handful. There's space for everyone, like there is in the stock market. Some will do well, some won't. Depends on how you execute your plan, etc. But this is going to be interesting. Can it get through that zone? But again, based on the initial market structure, there were opportunities to enter. Really good opportunities at one point. And right here, I believe that low was 53. Let me see. Yep, the low was 52.95. And that's a strong low. That is a very strong low. Maybe that's about as low as it gets, and you know, maybe we break. Who knows? But that is a very good low right there. But again, you can see we're getting to the point where this thing is compressing. We're getting, and maybe at some point we release to the upside. So I am in on this one. You know, depending on how things play out, wouldn't mind taking some profit and then adding back later, or whatever the case may be. But this is a good one to continue to watch, in my opinion. And another one here is Solana. There it is. This one's interesting as well. Has the potential, I think, to really open up to the upside. Initially, when we were looking at this, we said if this thing drops sub 120, it could be an opportunity to trap 115 to 120. When it dropped, though, it dropped hard, and it dropped into 80. And again, there's been a couple of times to get it off the 80s, and I whiffed on the first try. And when we pulled back right there, I thought there was a great shot to rally, and I got in at 100 on an initial basis. This thing rallied a little bit and then came back down, and lower low failure off the 80s. So I do have a position right where we are basically right now. That's I'm beginning. But again, you can see the market structure that's developed below 120, and as soon as it's able to get back above 120, it starts to open up this upper market structure up toward 200. So that's why the initial entry was at least 100 or better, and 100 ultimately could get us to 200 in the top of the next market structure once it's able to overcome 120. So 200 could be ahead. Again, at that point, you know, some of these, it's can we get it to this level? If so, sell half and you have a free trade for life. You can add back when you want or whatever the case is, but that's how I'm starting some of these right now, building in and then looking to add if there's the potential. But man, once we start to cross this upper market structure, it could open up some very good upside down the road. So those are a few here that I've engaged: Bitcoin, Ethereum, Solana, AVAX. There's others as well. One of the ones I've yet to get an entry in is Decentraland. That's MANA. I've messed around with this one too, and you know, when you're juggling so many different charts, sometimes you forget, or sometimes it's just not. You know, I just didn't make the move there on this because I've been doing other things. But this one, market structure as well. This is a kind of a metaverse play. But sub 250, I think initially we said 230 or 225 could be a great entry on that one. And on that major drop in late January, we got as low as 170. And in about a few weeks, it doubled to 355. 170 to 355. Doubled. And I missed it. And I was like, no way. But initially, I put my orders in. Once I missed below 2, I did put my orders in. I missed it. So I saw it here, didn't do anything about it, and then once it popped back above, I said, okay, let me get in at 2, and this got to like 202. Low is 203. Missed it. It rallied. Okay, let me get in at 225. Missed it. Rallied. Okay, let me get 250. Missed it, and it pushed up. So at that point, I said, you know what, screw this, I'm going back to 2. So I have an order sitting right here. It may not hit it now, but again, this is an opportunity just to see if down the road this virtual metaverse play matures not only from just $2 to $3, but pushes through these highs and maybe works beyond them. Just from a pure market structure perspective, $2 to $4, that's your double from right there to there. That's not a bad zone. That's very doable. And again, if I can get an entry here too, I'd likely sell half at 4 and have a free trade. And it doesn't matter what happens there because this thing can go to 0 and I've lost $0. So, you know, that's the goal at the moment. I had a shot here and whiffed a couple of times. But again, there's no hurry on some of these, right? There's so much uncertainty in this market. Some of what led me to whiff on some of these was not trying to overload on so many different entries on the same day when there could be further weakness ahead, and keeping dry powder just in case. But again, $2 here could be a great way to go to 4. Ultimately, you're looking 4 to 6, 6 to 8 down the road, right? So even just now, if we think it's going to 6 or 8 long term, this could be good. But again, proceed with caution with anything crypto related, anything stock related, anything related to the market at this moment. Proceed with caution. It's just a very dicey market, and we don't really have control over the situation, right? But what we do have control over is how we put our money to work, how we protect it, and the plan that we put forth. So that's what I'm doing right now, spreading the love here among different asset classes, among different charts. And so far, despite the massive correction we've seen in many of these markets, and the accounts that I've put money to work, they're up anywhere between 22 and 25% so far this year on the money put to work. So again, the approach is working here, continuing to build in, but knowing that much more volatility could be at play. So again, we got to proceed with caution. So there's a look at futures with ES and the NQ and where we might go there, keeping an eye on those key ranges. Crude oil and the major market structure potential there to rally up to 146, 145 to 150. Gold with the major rounded bottom, and if it can get through 2,000, it opens up the potential to 2,300. SI has made the move from 22 to 25, as we mentioned, could be the case, and now working our way likely to 29s. And again, big time moves there could be ahead. The crypto markets, we talked about the potential there and continuing to add several of those. And again, those industry groups right now, especially defensive groups like the defense contractors, ag chems right now, those things exploding to the upside. Keep an eye on ITA as a proxy to use in that case. But I'm going to go ahead and call it a day on the monthly market outlook. We've gone an hour and a half strong. Thank you very much for joining me here today. Again, I will have this posted to you immediately in case you want to re-watch the recording. But again, thoughts and prayers for everyone out there that is in harm's way in Ukraine. And again, wishing the best to everyone out there. Again, it puts into perspective what we have every day. Got to be grateful for what you have. And again, hoping for the best. Hoping for the best. All right, everyone. Have a fantastic rest of your evening. And I will see you all soon. Take care.